we will pay attention to the financial statements of a trading concern. This is done a little bit different from the financial statements of a service undertaking, because you have sales and cost of sales to calculate the gross profit first of all, and you will have trading stock in your balance sheet that you don't have in a service undertaking. Now, in this case, they didn't give us the figure for sales. So if one of the figures is left out, and if they can leave out any figure, it means that I must add up the one side where all the figures are available, and that's 124,000. And then I must add up the credit side, and if I add those three figures together, it gives me 30,000. So the 124,000 on the debit side, minus, if I add this together, the 35,000, I must subtract, and that will give me 89,000. So by calculation, working out what is the difference between the debit and credit side, I can determine what is my sales, and that gives me the 89,000. So remember, they can leave out any one of these figures, and you will have to calculate it by balancing and see which side is the biggest, and then subtract the smaller side from the biggest side to determine the amounts. Okay, first of all, we're going to do the statement of comprehensive income. Okay, this is the old income statement. So I just want to get it nice and near. Okay, so that means in this statement, we want to calculate what is our profit. So all the figures in your nominal account section is income and expenses. And all the income and expenses will be recorded in your statement of comprehensive income. Okay, so first of all, my sales are 89,000. My cost of sales is 31,000. Now I have to subtract the cost of sales from the sales figure to calculate what is the gross profit. So I have to show that 31,000 in brackets, and that would give me 58,000. Okay, so the gross profit is the difference between the cost price that you paid for the goods and the sales price. And then we must go and look if there's any other income. Okay, interest income is at the bottom. So what's very important here is that you will take your gross profit. Operating income is income that you earn in your daily activities in the business, and operating expenses is expenses that you pay in your daily activities to be able to create an income. And that will give me my operating profit. So the operating profit is calculated from the activities that we have in the business. After I calculated the operating profit, I will add interest received, and I will subtract interest expense, and that will give me my net profit. So this operating profit is very important, that you don't add interest received and subtract interest expense, because you want to know how much money was made out of your daily activities. Okay, in this question, we don't have operating income. Now we go to all our expenses. My first expense here is operating expenses, and then salaries and wages. Okay, so the salaries and wages is 18,100. Now, in the statement of comprehensive income, they can give you 6 or 7 lines that we will all write individually in this block, add them together to see what is my operating expenses. Or they can combine all those other expenses together to see what is all the other expenses. So when you write a test, you must look carefully whether they give you enough space to write each one of the expenses individually, or whether they want you to group it under sundry expenses. So if I look here, this rent expense is 7,600. Salaries we've already done. Then there's cost of sales we've already done. This is telephone is 2,300. Then there's water and electricity, 2,500. And there's stationery, 400. And if I add that together, it gives me a total of 12,800. Okay, I'm just going to say it again. You can combine all of these together, then you will show your calculation next to the word, or you can have it in separate lines. So you must look at the space that's provided. Okay, now I add all these together and they give me 30,900. I'm going to subtract the expenses, so I put it in brackets. Then I take my gross profit plus other income that we don't have here, minus the operating expenses, and that will give me my operating profit is then 27,100. Okay, then I look at interest income, and the interest is 2,000 Rand. So it means I will indicate on the income statement that there is an interest of 2,000. So my profit before the interest expense is 29,100. And then if I look at interest expense is 2,800. So interest expense will decrease my profit. So the amount will be in brackets again. And that means I get a total profit of 26,900. Okay, now what's very important here, when we finish with this income statement, we must determine whether this profit is worthwhile. Will the owner be satisfied with it, or what can he do to improve the situation? So he will have to decide. If he's not satisfied, how can I improve my income, and how can I decrease all my expenses so that I can have a bigger profit. Okay, then after that we're going to do the balance sheet. Okay, the statement of financial position. Now, because you have to calculate some of the figures, it's better first to do the notes and then just transfer the answers to the statement of financial position. So if I look at fixed assets, now remember, everything that goes in the balance sheet is in the balance sheet section. So we can close this nominal account section. We don't have to look at that anymore. Okay, so I can look at my land and buildings. I don't have any. Equipment is 42,000. I don't have a vehicle, so my total fixed assets is 42,000. Okay, then I go to cash and cash equivalents, and I see the bank is 9,000. The petty cash is 1,700, and that gives me 10,700. Okay, then for owner's equity, the capital was 25,000. So that is the balance in your ledger account that the owner contributed up to the end of the financial year, not after the end of the financial year. Then the profit that we calculated, that 26,300 belongs to the owner. So it means that we have to go and show that we will add that 26,300 to the capital balance, and that means that now his capital increased to 51,300. The owner invests money in the business to earn an income, and that profit is then added so that we can see what is the total amount. Unfortunately, he took some of the goods during the year, so the goods that he's taken, or the money that he's taken, will be subtracted from this drawings, 3,000, and that means his capital is now 48,300. So if I look at this figure, his capital, so this is the amount invested in the business, was 25,000. He made a profit of more than the amount that he invested. So this owner should be satisfied with his profit. And then the owner is entitled to take some of this money during the year, and whatever he takes will then be deducted from the profit because he's taken some of the profit during the year already. What we do now is we take these figures that we calculated in the statement notes, and we say the first one is land and buildings, and the fixed assets is 42,000. So I just write the 42,000 next to fixed assets, and this is my note number 1. Okay, then the second one is cash and cash equivalents. So I will show that the cash and cash equivalents is 10,700, and that's my note number 3. And then I go to equity, and I say equity, I calculated in the notes, so that means that is my note number 3. So it makes it much easier if you first do the notes and then you just go and you write down the amounts in your balance sheet. Okay, if we look at the rest of the amounts, we only look at the balance sheet section, not nominal account section. So we look, is there a fixed deposit? The fixed deposit is 3,600. So that means we have 45,600 as non-current assets. Remember, non-current assets will take more than 12 months in the future to change. Okay, financial assets, it can be paid out within the next year, then it will fall under current assets. If it will still be in the bank over a year, so on 31st of December 2022, then it means it will stay in non-current assets. Okay, in this question we don't have trade and other receivables, so I'd add all the amounts in the block and I say my total current assets is 10,700. Okay, now I take my non-current assets plus my current assets, and that will give me my total assets. So add those figures together, and that gives me 56,300. Okay, then loan. There's a loan from Netcor for 8,000. This loan could also be, for instance, a mortgage loan, so there could be 2, and then you add the figures in the block and you show what is your non-current. Okay, in this case we don't have trade and other payables, so here again I will add up my equity and my non-current liabilities, and I will get my total equity and liabilities, and that gives me 56,300. And then what I must do is this answer and this answer must be the same, otherwise you make mistakes somewhere. Now if you write a test and you get to this point and it's not the same, please don't panic. You will still get marks for all the entries that you've done. You will lose a mark for one entry that you didn't do, or where you made a mistake or whatever, adding mistake. So it's not the end of the world if it doesn't balance. So in a test, if you see it doesn't balance, carry on with the next question. And then at the end of the test, if you have time left over, you can come back to the balance sheet and see where you made the mistake. Okay, so when we've done the balance sheet, the owner will also look at this figures and determine whether he's satisfied with it. Is there anything that he should change? So he can decide that he would rather withdraw the money from the fixed deposit, pay it over on the loan so that he can pay less interest. Or he can decide that he can invest more money and buy more fixed assets to make more profits. So the owner will analyze everything in the statement of financial position to see how the profits of the business and the financial position of the business can improve in the future.